September was the month when my dividends went absolutely fruitin' nuts. I've been investing for over 15 years in mainly large cap UK companies. More recently, I've been adding a range of exchange traded funds. To me, investing is like planting fruit seeds. If you look after them and give them time to grow and multiply, then they will produce even more seeds. And before you know it, you will have a whole orchard of delicious fruits to enjoy. My journey began in 2009, and in the September of that year I received no dividends at all. It takes time for your tiny seeds to germinate. In the following September I received £45 from Barclays. In the September of 2011 more plants were now producing more fruit. Barclays, AstraZeneca, BP and an LED lighting company called Dividend produced a total of £190. It was so motivating seeing these totals increase that I just had to continue to see where this journey would take me. Let's return to September of 2024 to see how large our fruit and nut farm has grown. This is not investment advice and I'm just showing you my own journey. On the 5th of September, I received some cash from Relx. This company specialises in information analytics and decision-making tools. The shares are up 18% this year so far, and they pay a small dividend of 1.7%, spread over 2 payments a year. As you can see here, Relx is one of those companies which grow their dividends year after year, a very good sign indeed. This month, Relx paid out a total of £30. If you want to know how much I hold in each of the companies mentioned, then I've listed the totals in the video description. On the 6th, it was the turn of Unilever to reward its shareholders. The company is a consumer goods giant and is currently the 4th largest listed company in the UK. The shares have been on a bit of a roll this year, up 26%, and they pay a moderate dividend of 3% spread over 4 payments a year. Dividend growth is good and Unilever is one of my favourite companies. This month Unilever paid me a very juicy dividend of £315. On the 9th of September I received a present from AstraZeneca. This company is one of the largest pharmaceutical and biotechnology companies in the world. It currently holds the grand title of being the largest listed company in the UK. When I first started buying the shares, they were around £25 each. Today they are almost £118 each. Just this year alone, AstraZeneca have risen over 9% and they pay a dividend of 2% spread over 2 payments a year. Dividend growth looks robust. This month, AstraZeneca paid me a fruity bonus of £175. If you want to start your own money-making farm like I have, then Trading 212 will start you off with a free share worth up to £100. You can sign up using the link in the video description and you too will soon be producing some very tasty passive income. On the 10th of September, Lloyds Banking Group harvested some dividends and sent them my way. The shares are up 21% this year already and they pay out a very decent dividend of 5% split over 2 payments. Dividend growth has been a bit patchy however, as banking is a volatile sector, so expect a bumpy ride. Despite this, Lloyds still managed to pay out a total of £190. Very sweet indeed. On the 18th, I received a tasty snack from the London Stock Exchange Group. This company is a global provider of market data and infrastructure. The shares are up nearly 13% this year. They pay a fairly low yield of 1.3% spread over 2 payments a year. But just look at how well they grow the dividend. Very impressive indeed. I only started buying LSEG fairly recently, but they are already starting to bear fruit. This month the London Stock Exchange Group paid out a total of £20. On the 19th, it was the turn of Haleon to provide some lunch. Haleon is a consumer healthcare company which used to be part of GSK. Here are some of the brands which Haleon own. The shares are doing very well this year, up 20%. Dividend yield is small at 1.6%, but it appears to be growing strongly. Haleon could well be a takeover target in the future, so I'm happy to hold for the long term. This month, Haleon paid out a total of £35. Also on the 19th, I received an impressive fruit hamper from SSE. This power giant provides electricity and gas services to millions of customers in the UK. The shares are up 5% this year and there is a dividend of 3.1% spread over 2 payments. Dividend growth seems pretty stable and it's a company I've held for well over a decade. This month, SSE paid out a total of £305. If you like these sort of videos, then please let me know by giving that like button a quick tap, as it really helps out the channel. On the 20th, I received a nice appetizer from Barclays. It's been a terrific year for the bank so far, with Barclays shares up 46%, and the dividend is 3.6%. Barclays was the first share I bought in this portfolio more than 15 years ago. As you would expect in the banking sector, dividend payouts can be volatile, but this month Barclays paid out a very tasty treat of £230. Also on the 20th, it was the turn of BP to bear some fruit to its shareholders. This company is one of the world's oil and gas super majors and is currently the 6th largest listed company in the UK. The shares are down 12.6% this year, however, but the dividend yield is decent at 5.6%. Oil is another cyclical sector and dividends can fluctuate from year to year. Despite this, BP managed to pay out a fruity bonanza of £335. On the 23rd, it was the turn of Shell to provide me with a fruity banquet. Shell is another oil and gas super major and is currently the 2nd largest listed company in the UK. The share price is almost unchanged this year, but there is a decent dividend of 4.1% spread over 4 payments. Dividends are heading in the right direction. Yes, they did pay dividends before 2021, but the company was under a different name called Royal Dutch Shell. This month, Shell paid out a total of £325. On the subject of energy, this October, gas and electricity prices in the UK will rise on average by £149 a year. Now may be a great time to switch your energy provider to save money. I've been with Octopus Energy for over 3 years, and if you switch to this low-cost energy provider, we will both receive £50 of credit each. You can sign up using the link in the video description. Now on the 25th of September, all my exchange-traded funds paid out. The first one was VWRL, which gives you exposure to over 3,600 companies from around the world, all in one share. There is an ongoing charge of 0.22%. This ETF is up almost 10% this year, and there is a dividend of 1.9%. This month, VWRL paid out a total of £35. The second ETF was VEVE, which tracks over 2,000 companies from the developed world. Ongoing charges are 0.12%. This ETF is up 10% this year so far, and there is a small dividend of 1.7%. This month, my developed world ETF paid out £20. The third ETF to pay this month was IUSA. This one tracks the S&P 500 and has a tiny ongoing charge of just 0.07%. The ETF is up 14% this year and pays out a small dividend. This month, IUSA paid me a total of £100. My fourth ETF to pay out was VHYL. This one gives me exposure to over 1,700 global companies which pay out higher dividends. The ETF is up 4.7% this year. As with all the ETFs I own, it pays out quarterly. As this one is focused more on dividends, the yield is a bit higher at 3.3%. This screen shows how the dividends have grown over the years. This month, VHYL paid out a total of £75. My final ETF to pay out was ISF. This one tracks the FTSE 100 index and the ongoing charge is 0.07%. The price is up 6.2% this year and the yield is a decent 3.9%. Now you may have noticed that there is quite a lot of overlap in the companies within the ETFs I hold, and I do intend to consolidate some of them when I do my annual portfolio spring clean. This month, ISF paid out a total of £285. Very tasty indeed. On the 26th, I received some sweet treats from Rio Tinto. Rio is the 2nd largest metals and mining company in the world. The shares have had a bad time this year, however, as their fortunes are closely linked to that of China, which is faltering at present. The dividend yield is high at 7.1%. Last month I bought more Rio Tinto shares, taking advantage of these lower prices. Dividend growth is a bit subdued recently, and mining is a cyclical sector. Good times will return eventually. This month Rio paid out £240. On the 27th I received a fruity delight from HSBC. The shares are up 3.8% this year, and HSBC is another quarterly payer. The yield is very high at over 7%. Dividends are quite volatile but have risen sharply in the last year. This month HSBC paid out a total of £135. And now on to premium bonds. I use these as my emergency fund, kept out of the market on purpose, so hopefully I never have to sell my shares and can allow them to compound over time. Instead of receiving interest on your money, there are prizes to be won instead. The prize rate is currently 4.4%. There is one draw a month. Your capital is safe and you have easy access to your money. There is a chance to win £1 million each month, and all winnings are tax-free. First, the big winners for September. The first £1 million winner was based in West Sussex and held £18,101 in bonds. And the second jackpot winner was based in Manchester with a holding of £21,700. No £1 million for me this month, but I did manage to win a single prize of £50. The bar on the left shows what I would have expected to win in premium bonds so far this year with average luck and the full amount of £50,000 invested. The bar on the right shows what I've actually won. We are well behind at the moment, but still 3 months to go. Now for the overall passive income summary. The green bars on this graph show my passive income for the first 9 months of last year, and the blue bars are for this year. The total passive income this September was £2,900. This graph shows how my average monthly dividends have changed since my journey began. This does not include premium bond wins and is only share dividends. At the time of this video, I'm now receiving an average of £1,380 in dividends per month. And in the UK, we have something called a stocks and shares ISA, which means all my dividends are currently tax-free. Not only does my portfolio generate dividends, but the capital grows too. At the end of every quarter, I show a breakdown of my complete portfolio and how it's performed. Why not subscribe and be notified as soon as it's released? I'll shortly reveal everything I've been buying this month, but first a quick look at the FTSE 100 ex-dividend dates for the month ahead. A total of 12 companies go ex-div in October. If you hold the shares before this date, then you will be entitled to the dividend which will be paid to you on the payment dates. As an example, I own shares in Persimmon, which goes ex-div on the 17th of October. I'll receive 20 pence for every share held, and this will be paid to me on the 8th of November. Now for the payment dates in October, and I'll be receiving dividends from Croda, GSK, Diageo and Aviva. This screen shows the highest yields. Those in red, such as Vodafone, have faced recent dividend cuts. Vodafone's dividend has halved and Burberry's has been lost completely. Rio Tinto is another company which has cut its dividend. This is the danger of chasing very high yields. A cut often results in the share price falling further as investors become worried. The average yield of the FTSE 100 is 3.5%. My own portfolio is even lower at 3.3%. But as I've been investing for so long, and companies generally raise their dividends over time, my yield on cost is 6.1%. So what have I been buying this month? Well, I've added more to Unilever. It's been having a great year so far, and I've decided to buy into this momentum. I've also added more to my Developed World ETF, VEVE. I'm a real fan of this one. With investing, you really can enjoy the fruits of your labour. It really is effortless, but only if you follow the simple rules in this video here.